come to order. Members were not in session, so this is an informational meeting only. There'll be no votes taken. But we are going to be doing reviewing a bill that we expect will be covered in the special session that will be authored by Senator Anderson. And I want to make sure that we heard this bill in committee, since quite honestly, I'm not sure if all the committees will be up and running during special session. And then we'll get an update on the unemployment trust fund from DEED. They announced last week that the status of that fund, and we want to make sure that we as a committee get a chance to hear about that and ask some questions. So if there are no questions for me before we start, I would like to turn it over to Senator Anderson to talk about small business grant program. Senator Anderson.
Great. Thank you, Mr. Chair and members. Thanks for the opportunity to present this critically important bill yet again to the committee prior to the special session. I'm hopeful that we can finish it up here in the next day or so. I want to thank Ms. Doyle-Fontaine and Mr. Mumm, and as well as Mr. Eilers and Mr. Beshe for all their great work along the way. Thanks as well to my co-authors, Senator Housley, Senator Isaacson, and Senator Tomassoni, and Mr. Chair, special thanks to you for not only being a co-author, but for your partnership and critical leadership and work to get this across the finish line. This is just going to be a major piece of legislation that comes out of this special session. So members, as much as I'm truly thankful that we're at this point and we finally have an agreement on this bill with the administration and House, I got to just say this is one of the most frustrating processes that I've experienced in my 4 years in the Senate. And for the legislature, I think we can all agree that's saying something if one of us states something like this. The COVID crisis has had a devastating impact on our economy and our main streets in each of our districts. And as we know, it's to no fault of their own. 4 weeks ago, small business owners across the state were holding on to hope, first and foremost, that they'd be able to reopen. And aside from that, there was hope that financial assistance and a lifeline to save their business was on the way. And the bipartisan small business relief grant bill that moved through this committee, I believe unanimously, and passed the Senate with a 59-7 vote on the floor. Instead of going through that process again, we're doing it again. As we're doing it today, many would have hopefully already started to receive that assistance they've been pleading for since the governor initially issued the stay-at-home order back in March. So that hope was eliminated, as we know, as time literally ran out on the regular session. And these small businesses have experienced, again, we all know this, but we need to repeat it. They've experienced a staggering reduction in revenue from the ordered shutdown of services. Many of our small businesses, if they're not on the edge of insolvency, if they haven't closed already, they are. They're really close. And as the backbone of our economy, our small businesses provide those critical jobs, that economic growth, that prosperity to our communities and our state. And although this bill will not remove all that pain and suffering of the crisis, but it can and will give them some relief that is so desperately needed to hopefully survive until the economy comes back. These grants will provide needed support to Minnesota small businesses. But again, it's disappointing that these funds were not already made available when many of these businesses were still restricted from resuming operations.
See what happens with that.
My hope now is that many of these small businesses on Main Street across the state have been able to hold on and can sustain through the continued restrictions on their businesses and help lead our economy to a recovery. Each one of our communities, every one of the 67 districts, 134 House districts, our state of Minnesota and our country are really depending on these small businesses to recover. And so this is a way that we can help them. And so, Mr. Chair, at this time, I would like to have Mr. Mumm and Ms. Doyle-Fontaine to do a full walkthrough of the bill for the committee.
Thank you, Senator Anderson. Mr. Mumm, I believe you're going to start off first with the.
Yep. Mr. Chair, Senator Anderson, I'll
financials, and then we'll have
I'll go over the first two sections of the bill, which are a repayment mechanism for the $20 million that was transferred out of the 21st Century Fund in Chapter 71, which was enacted in late March or early April, and established some small business loans. But the way that this repayment mechanism works is in Section 1, there is a paragraph added to the section of law that deals with the budget reserve, and it establishes a six-position transfer that would repay the 21st Century Fund in increments of $5 million per year if the forecast assumes that there's a sufficient general fund balance to cover that. And that transfer would only occur after the other conditions are met, which would be topping off the cash flow account, the budget reserve account, and the other things listed in paragraphs 1 through 5. That would shut off when the total transfer of $20 million is made. And Section 2 modifies Chapter 71 so that the repayments for the loans that were made under that chapter are instead of being credited back to the 21st Century Fund, are credited back to the general fund after the $20 million is repaid. So this just ensures that if the $20 million is repaid and there are still loans outstanding from Chapter 71, those loan repayments would go back to the general fund rather than continue to flow into the 21st Century Fund. So that's basically what the first two sections do, and I'll turn it over to Ms. Doyle Fontaine to explain the grant appropriations in the bill.
Do you want me to go ahead, Mr. Chair? Okay, so I will start with Section 3, and in Section 3, what it does is there in Chapter 70, I believe it was Chapter 70, there was the small business loan guarantee money that was appropriated for that. I think it was 10 million, and some of that money it's not going to be used or is not being used as they thought it might be. So this Section 3 would appropriate $2.5 million from that small business, the loan guarantee trust fund account for the purpose of the small business relief grants. Then in Section 4, $60 million is appropriated from the coronavirus relief fund to the Commissioner of Deed for the purpose of these small business relief grants. And you'll see that the funds are available until December 30th of 2020. That is not a typo. It's not supposed to say December 31st. The federal funds are only available until December 30th. So that's the date that's put in here for those purposes. Then you'll see that this is similar to the mechanism, the way that it was done in the regular session, the bill, the way that it has money go through 31,250,000 goes to the Minnesota Initiative funds for businesses in Greater Minnesota, and then that same amount would be for grants that would go out through a nonprofit lender approved list by deed to in the the 7-county metropolitan area. So then, if you look down, then on line 4.1 of the document, the version 4 document, it specifies that 2.2 million that of those amounts that go to Greater Minnesota and in the 7-county metropolitan area will be for administrative costs. And the money that's going to be for the administrative costs will be from general fund money. It won't be from the the coronavirus funds, because that's not allowable under the federal law. So just to specify that that's where that will be coming from. Then some other information on line 4.3, it says that the grants should be up to $10,000 for individual businesses. And it talks about what businesses and subgrantees, what they need to do in order to qualify for the grants, which includes that they need to be located in Minnesota and be owned by a permanent resident of Minnesota, have a permanent physical location, be in good standing, employ the equivalent of 50 full-time workers or less, and then demonstrate the COVID-related hardship to the business. And then it talks about, on line 4.11, talks about who would be eligible, as far as that they give priority to businesses that were restricted from operating as of May 18th. And then also talks about on 4.13 what the eligible uses for the funds would be, including payroll, rent, mortgage payments, utility bills, and other similar business expenses. Then down on line 4.16, you get into some more specifics about how the money will go out. And I'm sorry, I need to pull up the document here for a second. That 18 million will be for the micro businesses. That's on line 4.17. On line 4.19, $15 million is specified for 10 million of that would be to minority businesses. 2.5 million are to majority owned and operated by veterans, and then 2.5 for businesses that are owned and operated by women. On line 4.24, it specifies that 2.5 million is going to be for what is termed as cultural malls. So 2.5 million are for those operators. And then those grants are up to $250,000 per operator. And then all of that amount, except for $10,000, needs to go out or needs to be as subgrants to tenants of the operator. And that's in order to maintain the existing tenants and in order to forgive the rent for those existing tenants. And then also it specifies that a tenant subgrantee is also subject to the same requirements regarding having a permanent physical location and being in good standing. That's on line 4.31. Then some other specifics about the grants. Grants on line 5.1. A business cannot have received a grant or a loan from one of the previous programs. There was a prior small business grant program related to COVID, so they cannot get another grant. Then it talks about the commissioner needs to develop the forms and applications. On line 5.6, the way that the grants are going to be awarded is going to be by a lottery. So the grant applications will be collected over a period of 10 calendar days, and they will come in, and it will be as done as a lottery. So that is the way that this is going to be working. On 5.9, there was some back and forth with Department of Employment and Economic Development, as well as MMB and administration, regarding what kind of exemptions would be necessary to allow this grant process to work. It's going to be a little different than a normal grant process. And so there were some exemptions that were needed from the regular grants management that would be necessary. However, there will still be some auditing that can be done. And so there are those measures that will still be some accountability for the grants. And then that authority does expire in conjunction with the expiration of the program on December 30th of 2020. And finally, I'm sorry, on line 5.15, there is going to be a report that's required from the Commissioner of Employment and Economic Development to the legislature regarding the grants that were provided and any subgrants under this section. So I think that is it. I don't know if there are any questions about that. I'm sorry if it was too detailed, but there is a lot going on with this language. So that concludes my remarks.
Well, thank you. Thank you, Ms. Fontaine. And members, most of this language is and the basis of the changes that we've made have been based off Senator Anderson's bill. So we've seen most of it already. Senator Anderson, unless you have any comments, I'd like to go ahead and get to testifiers.
Thanks, Mr. Chair. No, that's great.
Okay. First on the list, I have Mike Tamale from NDC. Welcome back to the committee, Mike. Please state your name for the record.
My name is Mike Tamale with the Neighbor Development Center, and I'm joined by Renee Dossman, who's the Executive Director of Twin Cities Operations for the Neighbor Development Center. Thank you for having us on, and I believe Renee will go first.
All right, welcome to the committee, Ms. Dossman. Please state
Thank
your name
you.
for the record and feel free to begin when you're ready.
All right. Thank you, Mr. Chairman. Renee Dossman with the Neighborhood Development Center. Thank you, everyone, for this opportunity and all the work that I know has been done to create this bill. NDC has been a strong partnership with the state legislature, as well as DEED on this first round of SBEL funding. As a result, we made 55 loans worth $1.7 million. 70% of those were to entrepreneurs of color. 50% were to micro businesses with 6 or fewer employees. In addition to the deed loans and the SBL loans, we've also done 15 PPP loans ourselves. We realized, to be honest with you, that first round of funding came out and went really quickly, as you guys are all aware. But then we also noticed that it was not getting to the people that we support. And so, because we're a CDFI, we jumped in. We had a window. They actually closed everyone else out and gave us a window where we could really get through. And so we were able to do 15 and are open to do more. We've been doing outreach to those that we support in waves in terms of their relationship to NDC. In our incubators have had loans from us. We've had any contact with them from a TA perspective. So we've done that. We also assisted on, for some of the people that we support, the paperwork, the EIDL, pulling together, like not being able to read it, translating it for them. We've done that kind of TA work as well. And so when we think about the Midtown Global Market, which we're co-owners of, which would fall under the cultural markets that we're co-owners of with the Cultural Wellness Center, it has been, it's been devastating, to be quite honest with you. They haven't been able to really get any revenue generated, a little bit with takeout and delivery, which grateful for. So we're not going to give up. We're entrepreneurs at heart as well. So we have a strong partnership with the Alina Hospital, and they're right there in the market with us. And so we started this program called Meals for Medics, which is, we wanted to show our love and support for them and their frontline workers. So we got some entrepreneurs that were still open. So we had like 6 or 7 restaurants that were open in the market. And so we supplied meals to Alina, 50 meals a day. We did a GoFundMe page. We raised about $36,000, and we also got some funding. We got some funding as a part of that from Minneapolis Foundation. So that was a win-win for us to be able to give to the frontline workers, but also to give just a little bit of income to the entrepreneurs that are in the market. So for COVID-19, we're also doing focused and detailed technical assistance. We have a lot of we have some entrepreneurs that didn't have a website prior to this, didn't have delivery set up. So been working with them on different delivery options that they could get set up for their business. And we're looking at how do we do that more broadly, or how do we do that from a market perspective? We actually have an entrepreneur that we're working with that wants to do delivery exclusive for the market. So we're excited about that. But we also came up with this concept of a tech packet to get them, I was like, why don't they have a website? Well, it's the cost. So we've put together a packet to help those that don't get set up. We pay for it, do those kinds of things to get them going and to get them just ready for this next phase, because it's going to be necessary. We're looking at how do we do a global marketplace for the global market where you could just buy from all the different vendors and do that. And so we're working through those details and thinking of the market, for the future. So how we set ourselves up, it's how do we get them ready for this next phase? How do we get them ready to open? We've sent out a guideline for them for things to think about when you open. And we've called them multiple times to the different waves, hundreds of entrepreneurs, and talk them through those documents as well. We're looking, we were feeling really good about reopening. And then, as you guys are all well aware of what happened around the market, and just trying to keep the market safe from people just trying to attack it, to be honest with you, just based on the values of what the market stands for. It's put those entrepreneurs reeling again. We were just getting ready to open, was ordering our banner to say we're open, curbside, we got some tables out, and then everything else happened, and they haven't been able to be open for two weeks. We're hoping to open on Monday, and I know that this bill isn't about what we've just experienced with the murder of George Floyd, but it's just one more thing that these entrepreneurs have to deal with. It's just one more thing. And so we're doing the best we can. Obviously, with marketing, we're resilient, and we're going to come back from this, and we're going to come back from this all together. But your support of this, whatever we can do to give them some relief would be greatly appreciated. And I'll turn it over to Mike. Thank you.
Thank you, Ms. Dossman. Mr. Tamale.
Thank you, Senator Pratt and Renee. My first comment is really just, again, from my heart to all of you for how hard you've been working for so long on this incredible problem that sort of came upon the whole state. And we're extremely aware that for us working with, a couple hundred or say 400 entrepreneurs is a massive challenge, but you're working corner to corner in this entire state. And, the challenge that you've taken on for a number of months now is really remarkable. And I just want to tip my hat to all of you and to Senator Anderson for crafting this initially, and everybody on this committee. And that goes honestly for the deed staff and the legislative staff as well. Huge hours, a lot of head scratching on how to solve a lot of complicated brand new issues. So we appreciate that immensely. Right now, we're all facing, around here anyway, three major challenges. One is 3 months of shutdown by COVID-19. Another is trying to reopen in the post-COVID environment, where we really don't know what customers want or what we can get in the door, et cetera. And then obviously the destruction that happened in the communities we work in. And pretty much all of you are out on the street walking with us, looking at what's taking place out there. So this bill here is a great step toward helping with the first two of these challenges, and we're all working on coming up with other pieces to the puzzle. Nobody is looking to the legislature to solve 100% of everything. That's impossible, but we're all out there hustling as hard as we can on every front, and that goes for every entrepreneur as well. The beauty of who we get to work with is that they're all entrepreneurs. They wouldn't have been in business in the first place if they weren't incredibly resilient and creative and smart, and we ultimately rely on them to get us through all of this, as Renee said. Our approach is very comprehensive with low income sort of new startup entrepreneurs. So it involves extensive training classes, business planning, legal help, accounting help, marketing help, plus what we call high touch, high risk lending, and then ongoing technical assistance. So all of that coupled with really strong networks throughout these communities to reach these folks in the first place and gain their trust, all of that's what's going to be necessary going forward. So besides financing and grants, et cetera, which will be enormously useful, we always have to remember that technical assistance, as Renee was describing, is critical, and particularly technical assistance providers that are able to connect with and gain the trust of each one of these entrepreneurs, which is what our network and Deeds Network has really created in many places of the state. So, in terms of the bill itself, we think it'll be extremely useful for those who win the lottery, you might say, and we're keeping our eye out very closely for those who don't, and we'll be doing whatever we can to help as many of them as possible get some kind of support as well. With regards to the global market and the Mercado Central, a $250,000 grant, if that's what we are able to get, would be fantastic. It'll be huge. For us, it represents about 40% of our loss, anticipated loss, but that's an enormous step forward. So we appreciate that a lot. If there's any way to jack that up a little bit, we'd appreciate that as well. With that, I just want to thank you again and turn this back over to the chairman. Thank you.
Thank you, Mr. Tamale. And next we have Mr. Marquardt from the Southwest Initiative Foundation. Welcome to the committee.
Thank you, Mr.
When you're ready.
Thank you, Mr. Chair. Can you hear me okay?
I can, thanks.
Okay, thank you. I'm Scott Marquardt with Southwest Initiative Foundation. We serve the 18 counties and 2 native nations of Southwest Minnesota over to the South Dakota and Iowa borders. I also have another hat I'll wear in my introduction here. I'm a board treasurer and board officer for Greater Minnesota Partnership, and just grateful to be with all of you today to talk about this important bill. Thank you to Senator Anderson for your leadership on this, and to everyone that's supporting this. There's no question there's continued need on Main Street throughout Minnesota in all these businesses, and we're grateful for the money that's been out there before. First and foremost, thank you so much to all of you, to the legislature, to the administration for creating the Small Business Emergency Loan Program and the Small Business Loan Guarantee Program. With the SBEL money, we were able to fund 82 loans to businesses in all sizes of our communities. That's been huge for Southwest Minnesota, and I cannot say enough how grateful we are. I also know that some of the cash for the Small Business Loan Guarantee Program will be repurposed for the grant program. Fully understand that. I just want to say for the dollars that were available, and we have a couple left in the pipeline to do, hopefully, SBLG has been huge, especially for the businesses that might have fallen through the cracks in some of the other government programs, or that might need a couple more dollars than SBEL had. So we're very appreciative for both. I also would like to say, Mr. Chair and committee members, on the record, how thankful we are to Commissioner Grove and his team, especially the Office of Business Finance at DEED, how responsive they've been to us as a lender. They've been clear, they've been direct. They've had a very fast turnaround with all these programs. Sometimes you build the plane as you fly it, and they were responding to us on nights and weekends as we were trying to get money out the door as fast as possible. So thank you to Bob, Drew, and everyone at DEED who made it possible for us to do this. Thank you. We are so appreciative to be listed potentially as the deployment partner for Greater Minnesota. All the initiative foundations, we're ready. Business finance and grant making is in our wheelhouse since we were born, and we're ready to do this as the next phase of economic recovery and response in our region. Just a couple of things, and I know time is of the essence. I just want to point out a couple of technical things. In line 5.4, we're very happy to see that the Commissioner's Office will develop the criteria and forms, kind of like with SBEL and SBLG, that we can work with the department to create the process to get it on the street. We're very hopeful and thankful that that's in there. Also in line 4.19, that whole section about the specific appropriations to reach target populations that align with the Emerging Entrepreneur Loan Program, Black, Indigenous, and people of color, women, veterans, et cetera. We greatly appreciate that. ELP has been a huge program for us in our region, and aligning these grant dollars with those criteria is something we fully support, and appreciate, Senator Anderson, that you put that in there. Just again, a couple of technical questions I have. Although DEED will be working on the criteria, these are just things I wanted to point out to make sure we're understanding it correctly, or perhaps that a conversation could happen. In line 4.7, regarding the good standing with the Secretary of State and Department of Revenue, a very technical question, but for SBEL and SBLG, a condition of closing a deal was that they were in good standing with the Secretary of State at the time of approval. I see in this bill it says March 1st, so that is a change from the previous programs. Just want to understand that, if it is good standing on the date of award or good standing backdated. Just throwing that out because it is a difference in the two programs. One other thing I would like to point out in line 4.5, located in the state of Minnesota and owned by a permanent resident of Minnesota, fully understand and respect the desire to keep the wealth, to keep the economic activity in Minnesota. My region borders 2 states. A good chunk of my counties are border counties, and I have a lot of border cities. One thing that was totally reaffirmed to us during the SBEL loans was that we had a number of critical businesses in our border towns and our border counties that might have been owned by somebody across the state line. For us, when we looked at those, because SBEL allowed us to do those deals, it was because the jobs were in Minnesota, the tax base was in Minnesota, the economic activity might be the only place that does the senior dining, the only grocery store. We also have cases where, like the Dairy Queen franchise or the Subway franchise, those are critical to the community culture. They get folks off the road that are traveling through, and those are independent businesses too. If I'm reading the bill correctly, those businesses that might have all of their activity in Minnesota, but the owner lives on the family farm on the other side of the state line, wouldn't be eligible. I'm well aware there's more demand and need than there is going to be funds available, but could some provision or consideration be given if all of the activity is in Minnesota, but the person does live across the state line? Could a radius be put in, or something else? Again, Mr. Chair and Senator Anderson, I don't want to be greedy, but we do have a lot of these situations with our border towns. In section 4.11 on priority given to businesses closed by executive order, fully understand and respect that provision and where it's coming from. Again, realizing there'd be more demand. One thing we've seen with SBEL and SBLG is the number of businesses hurting that were not closed by executive order, but their customers were impacted by it, or with reality of the economy. Lodging establishments, small independent trucking operators, small chiropractic practices, et cetera, things that might have not fallen into an executive order. I understand we're in the 9th inning and that the priority would be in there, but as funds would not be used or as priority is defined, really lifting up the businesses that were hurt by the pandemic but weren't named in an executive order would certainly be something that is important to us. So that one last thing, and I didn't have this in my notes before Ms. Fontaine did the walkthrough, so I completely apologize if I misunderstood. But in line 5.1, grants cannot be made to a business that previously received a loan. Our interpretation of that was a restriction on SBEL borrowers. If this also applies to small business loan guarantee borrowers, we would respectfully ask for that to be modified if possible. SBEL, we know, had forgiveness provision, and we understand why that's in there. But for our loan guarantee loans, it's a friendlier rate and amortization, but they're a market loan. There's nothing forgiven in that. And we are hopeful that if somebody got an SBELG market loan, that they would still be eligible for this, because unless the other SBLGs are forgiving, we're certainly not. And, we've done a good chunk of those approved. So apologize if that was in the weeds, but just wanted to clarify that based upon the walkthrough. So again, all things considered, we are grateful for this capital. We will put it to use ASAP if we'd be blessed enough to be the partner. And my key takeaway, Mr. Chair, would be, can we have a conversation about the residency requirement for our border towns? Thank you.
Thank you. Now we have Mr. McMahon from the Greater Minnesota Partnership, Mr. Hickey, and then we'll open it up to questions from members. So, Mr. McMahon, welcome back to the committee. Please state your name for the record and feel free to begin when you're ready.
Great, thank you, Senator. My name is Scott McMahon. I'm here on behalf of Flaherty & Hood, representing our client, the Greater Minnesota Partnership. GMNP is a collection of economic development agencies, businesses, chambers of commerce, nonprofits, foundations throughout Greater Minnesota, focused on advancing and growing our economies and making sure that our communities are healthy and vibrant. Right now, as you all know, our communities aren't healthy and vibrant. The COVID pandemic has had a significant economic impact on our main streets, and we're really appreciative that this bill is moving forward. These dollars, we know, are critically important to these small businesses to try and keep them afloat until our economy can recover, our customers can get back in the stores, and we can get things moving forward. I do want to thank Senator Anderson for keeping this issue alive and working with the House to come to some sort of agreement. Our hope is that we can get this bill buttoned up and pass off the House and Senate floor into the governor and the upcoming special session, because the only thing that would have made these dollars better than coming out now would have been coming out a month ago. So we really appreciate that they're there. I want to speak just on behalf of Greater Minnesota and acknowledge that we appreciate the work that DEED has done in helping our communities in this time of trouble, as well as the work that Initiative Foundations have been doing. We have total confidence in DEED and their partnership with the MIFs to effectively run this program and to figure out ways to get these dollars out quickly. We have seen amazing work from the Initiative Foundations and DEED already during this time of trouble, both through the Small Business Emergency Loan Program and the Child Care Emergency Grant Program that went out in March and April, and that has a third round coming out in about a week or so. We know that these organizations have the abilities to effectively manage this partnership and manage this process, as well as make sure that the dollars get out in a regionally respectable process. So thank you for your use of the Initiative Foundations in this way. They're a great partner, and we know that things will go smoothly from that standpoint. One of the things to think about, and I know this is the case in all communities, but it's particularly true in Greater Minnesota. Small businesses are the lifeblood of our communities. The small business owners are the ones who are, active in our communities, are the ones that support our Little League teams, are the ones that support our schools. The dollars that these small entrepreneurs generate flow through our communities in ways that get magnified and have a major impact on everything that we do. The challenge is when we lose these businesses, not only do we lose that community partner, but we lose a retail or small business spot that may be vacant for months or years as a result of a closure. In a lot of our communities, we don't have people chomping at the bit to open new businesses. And so when a business leaves, that business has a major impact on what happens in our community. And so, we know that these dollars aren't enough to solve all the problems in our communities, but the impact that they will have a profound impact on the businesses we have and the businesses that impact our community. So thank you all for your commitment on making this go forward, and we look forward to the dollars getting out there. The one request that we would have is that upon approval of this bill, is that we work with DEED and with the partner organizations to get the dollars out as quickly as possible. I know that we have a 10-day window for the application to come in and to get processed through. We hope that there isn't a significant amount of time between when the governor signs off on this bill and when that 10-day window opens up, because our employers and our small businesses need these dollars, and we're better off getting them out quickly rather than waiting for them. Thank you.
There's my unmute button. Thank you, Mr. McMahon. And Mr. Hickey from NFI.
Yeah, Mr. Chairman, am I coming through?
And next we have Mr. Hickey from
Well, thanks, Mr. Chairman. You're going into freeze frame on me. I hope I'm coming through. But Mike Hickey with National Federation of Independent Business, and hoping this is working. Anyways, I just wanted to thank Senator Anderson and you, Mr. Chairman, and all the committee members for your strong bipartisan support to try to do another thing to help small business. As many of you know, National Federation of Independent Business, we're the state's major small business group with about 10,000 members, and we don't have a single member that could not benefit or use the help of this $10,000 infusion. So it's really appreciated. I realize it's going to be limited to who can receive it, but really appreciate your efforts here. Small businesses, I don't want to be overly redundant, but small businesses have been significantly harmed by the COVID virus environment, and also significantly harmed by what we feel were over restrictive closure policies of this state. And things are opening up again. This is coming at the right time, and people really need the help. Profit margins in small business are very narrow, and there's not a single business that couldn't use this help. This is another lifeline to go along with the various federal programs, the PPP loans, the EIDL loans, and our first round of previous small business COVID-oriented loans. But thanks so much, and hopefully this is going to help a significant number of people, and we can continue to reopen and try to get back on our feet. So I appreciate the time.
Sorry, speaking on mute. Thank you, Mr. Hickey. I'll open it up to member questions. I know I have Senator Isaacson wanting to make some comments, and if anybody wants to ask a question, just use the raised hand function. Senator Isaacson.
Thank you, Mr. Chairman. I have to say that I am just overwhelmed and pleased with getting to this point. And I have to tip of the hat to Senator Pratt and Senator Anderson for sticking with this when I know there were some parts of it that weren't fun and not what you were hoping would be the outcome. And I have to tell you that I really think that this demonstrates where the legislature can be at its best. This is such, I don't know if this will be hailed as such, but I think that looking back on it, we're going to see this as probably one of the more meaningful things we did to help our economy and our small businesses. And I'm just so grateful. I've been having conversations all week with different businesses in my area, and they're excited to know that stuff like this is being done and being focused on. And I think this brings a lot of real positivity. And I'm just really excited about that. I wanted to just also take a second, and I'm not sure if she's still on, but I wanted to say that I believe it was Renee who shared some of the pain she's feeling over what her entrepreneurs are dealing with. And that, I hear that pain, and I see that you're playing such an important role that may not be immediately seen as that, but such an important role in helping all aspects of our state get better in a place where it was inordinately hit with the 1-2 punch of COVID, and then the unfortunate death or, murder of George Floyd. And so I hope that you'll continue doing the work you're doing, and I'm with you in spirit. And if there's ever anything more we can do to be helpful in that situation, I want to be helpful there. But again, Senator Pratt and Senator Anderson, this is a real defining bill in my mind, and the work you guys did on this was just really amazing. And I can't speak highly enough of how much I appreciate that, and I'm excited to see this go through. And I want to make one comment to somebody at the end who talked about making sure this money goes as fast as it can. I had been on the conversation with Commissioner Grove a few times, and I suggested to him, as was suggested to me by Senator Anderson and Pratt, that we should have those people. We know this is going to get done, let's get all the silly paperwork and all the busy work out of the way. So the minute the governor's pen strikes the paper, the machine just turns on and it's already ready to go. And I hope that they took that advice seriously, because I think you're right. Timing is of the essence. And I want to see our government react as fast as it can once this is signed into law, putting this money to good use and helping our folks in these businesses climb back out of the hole. So thanks again. I appreciate the time to talk, and I really appreciate the work that's being done here. Thank you.
Thank you, Senator Isaacson. Next on the list, I have Senator Simonson.
Thank you, Mr. Chair. And I just have one quick question, probably for Senator Anderson. I picked up on it during some of the testimony that we just heard, specific to line 4.5 of the bill, where it talks about the permanent residency of the owner. And I just wondered what your thoughts were as we consider border cities and what that might mean. If it's an owner that lives on the other side of the border, but obviously the business would be located here in Minnesota. Perhaps the majority of the employees might be located in Minnesota. Just curious your thoughts on that, and if where you think that might end up, or are you considering anything to address that?
Mr. Chair and Senator Simonson, thanks for the question. I know Mr. Marquardt brought up the same issue as well. As we crafted this, there was a lot of comments in those initial conversations in the initial committee hearing about a lot of the abuse of some of the COVID dollars in a lot of the aid packages around the country, not only in Minnesota. What we wanted to do, because the demand far outweighs the supply here, was to make sure that Minnesotans, Minnesota residents, Minnesota businesses received the opportunity to get into the pool, get into the lottery to receive these dollars. And so I really appreciate the question and the conversation around border state residents. It's something we can certainly talk about, but at this time, again, the supply and the demand for these grants, I mean, we're talking about 5% or less of the small businesses will actually be able to receive these grants. So we needed to make sure that those businesses, again, that are financially impacted by COVID, that are residents in Minnesota, that have a Minnesota permanent residence, and meet the other eligibility standards, are the ones that get into the pool. So I really appreciate the question, Mr. Chair. I don't know if you've had any additional comments, but that's all I have for now.
Mr. Chair, quick follow-up.
Senator Simonson.
Yeah, and thanks, Senator Anderson. I really appreciate it. I know that you put a lot of thought into this, and it's difficult sometimes to delineate where those lines should actually be. But just as representing a border city, I can think of a number of instances where we have owners that may live across the border in Wisconsin, by their own choice for whatever reason. But yet these are Minnesota businesses. Many of the employees are Minnesota residents, and obviously they're doing business in the state of Minnesota. So I'll continue to put some thought into it too, and perhaps touch base with you over the next few days, and we'll just think about it. But just wanted to put that on your radar. Thanks.
Senator Anderson, did you have, I forgot to go back to you for comments. Do you have any comments while members think of questions?
No, I think one of the other points that Mr. Marquardt, or question that he had brought up, was with regards to, and I know Mr. McKinnon is on the call. He may be able to delineate the differences between the different programs, but with regards to line 4.7, where it says we're in good standing with the Secretary of State and Department of Revenue as of March 1st, 2020. The purpose behind that was to make sure that those businesses that were in good standing prior to the crisis hitting Minnesota, right? And so this was making sure that this isn't a business that just popped up post-COVID crisis. These are businesses that were in good standing on March 1st prior to the orders would be eligible. And then again, they have to meet the other eligibility standards. So that was the other point I wanted to make, Mr. Chair.
Thank you, Senator Anderson. Do we have any other questions for Senator Anderson? Seeing none, Mr. McKinnon, I did get one question from Sia Her at the Council of Asian Pacific Minnesotans, and she just wants to make sure that DEED works with them to make sure that we're targeting API businesses as well. And so I'm sure you are. We've talked about making sure that, and even with the lottery, making sure that business owners who are small and maybe don't have the wherewithal to get the application in within the first 10 minutes that the gate is open, have a fair shot at receiving funding. And then also that we just be, very broad in how we address distribution of the funds. So with that, Senator Anderson, any other closing comments before we move on? Or maybe I should ask Mr. McKinnon, do you have any comments that you'd like to make?
Thank you, Mr. Chair and members. I too want to thank all of you for the work that you've done here, and in particular, Senate Council and other staff that you have. We've spent a lot of time on this. In addition, really appreciate the thanks that's gone out to my staff here at DEED. We have done a lot of work over the past few months, and really look forward to doing this. I know you've got a time issue here. I'd be happy to just go over a couple of the results from the emergency loans or the loan guarantee if you want, but if not, I'm happy to answer any other questions or just be silent.
Thank you. Seeing no other questions, Senator Anderson, any closing comments?
I think that sums it up, Mr. Chair. Again, a lot of thanks, but this has been a lot of conversations over the last couple months. Just after the shutdown was ordered, businesses needed help, and this is an opportunity that is a bipartisan effort. The voices within the legislature that have worked with this, worked on this, the House, DEED, Mr. McKinnon, appreciate your service and your work, Commissioner Grove. Now it's the time to get it across the finish line, get it across the goal line. We got to get this done and get these checks out so we can help as many businesses as we can. So, Mr. Chair, thanks a lot.
Well, thank you, Senator Anderson. You put a lot of work into this bill and your tenacity, and I'm looking forward to being able to pass this bill and actually get it signed into law during special session. So thank you very much. With that, members, we'll move on. We have an update from DEED on unemployment insurance, and we're joined by Mr. Hagman. Welcome to the committee, Mr. Hagman. Please state your name for the record, and we'll go ahead and do some opening comments before we get into member questions.
Thank you, Mr. Chair. Thank you, members. My name is Jim Hagman. I'm the UI director here at DEED. Our commissioner has provided updates to the committee over the last few weeks. I've not been available, unfortunately, to participate in that, and we'd like to use this as an opportunity to give you a little bit more detail if we can. As you know, we've been working hard to respond to the pandemic here in the UI program. We've tried to transform our 85-year-old program into something that works for a pandemic and something that it was not initially designed to do. At the same time that we've been making changes to our business model and our systems, we've also had to physically separate our staff from one another and ultimately move them off-site and into working from home where they can in order for them to be safe as well. As part of our normal management process, we plan every year for the seasonal downturn that we always have, plus any recession that we might have to prepare for. We are prepared for the normal cycles that we have. This one is a little bigger, as everyone knows, than what we've seen before. In 2019, we took about 220,000 initial claims. In the course of the last 12 weeks or so, we've taken over 750,000 claims. So we've taken more claims in the last 12 weeks than we did in the last 4 years, which is a huge amount of activity and illustrates just how challenging this has been for many Minnesotans. Even now, we're taking about 10 times the number of claims per week that we would have for the same weeks last year. So while things have slowed down a bit, we're still working to try to stay on top of this problem. We know that every application that we take represents a family and a worker that needs help with paying their bills and their rent and their mortgage. These are our friends, our families, our neighbors as well. We're also mindful that the impact of the UI program is to ensure that spending continues inside of the economy so that it doesn't drop off too much and do more damage along the way. And so we've been conscious of trying to be prompt at implementing new programs and moving the financial assistance that we provide out to Minnesota workers and their families as quickly as possible. Minnesota was one of the first states to implement all the federal programs, including pandemic unemployment assistance for folks not eligible for regular UI, the federal extended benefits for those who have exhausted their benefits, and then a $600 payment that's additional for folks that are eligible otherwise. And this is intended to help maintain spending levels in communities throughout Minnesota. We recognize that everything's not gone perfectly. We've worked very hard to do the very best we can. I think we've done pretty well. We've done better than most states, I know that. And I just want to say that it has been a real privilege and an honor to work with the committed public servants here in the UI program. A little overview of what we're seeing so far. Again, we've got about 750, it's actually about 760,000 new applications for benefits. That's about 24% of the labor force in total. Obviously, people are coming on and leaving the program. Applications have dropped a little bit in the last few weeks, as have weekly requests for benefits. We're hopeful, as everyone else is, that this is indicative of us turning back to reopening and folks getting back to work. And we are working with our colleagues in our labor market information area here at DEED to turn our raw data into meaningful information that will help all of us make good decisions. The characteristics of the individuals who have applied for benefits have shifted a little bit from what we ordinarily see in Minnesota. Minnesota is a very seasonal economy, so what we typically see in the program in any given year is a lot of seasonal construction workers who characteristically are more often male, more often sort of middle-aged, and more often white. In this particular event, we're seeing that 71.9% of applicants are white, and that represents about 20.5% of the white labor force. On the other hand, 38.3% are people of color, and it's a much larger proportion of that portion of the labor force. So Black Minnesotans, Native American individuals as well are disproportionately appear to be affected and applying for benefits. This reflects their participation in industries that were especially hard hit by the need to shut down certain businesses that provided direct service. And obviously we have to do some social distancing there. Education levels, typically we know what the education levels are for the workforce as a whole. The education levels of those affected, as indicated by their applications for benefits, seem to be a little bit lower for the college graduation rate than we would see in the overall workforce. So again, lower waged workers, workers with a little less social capital to allow them to recover. And finally, there's, as I said at the beginning, tends to be a little bit more male oriented in the program, but we've shifted now that the program has become more women than men right now. So 53.3% of the applicants have been women, 46.6% have been men, and that's basically reverses the normal annual pattern for Minnesota UI. If you've not already looked, our LMI group has published some great information on DEED's website, and they're continuing to update that and continue to do a great job taking apart UI data, which is transactional administrative data, and they're trying to turn it into good economic information. We've tried hard to adapt our systems and our processes to accommodate the needs of Minnesotans. We've worked thousands of hours of overtime. We're up and working 7 days a week. We've hired or redirected at least 50 more staff. We've extended our online application from about 60 hours per week to now being up 84 hours a week, including being up on Sundays. We've doubled the number of servers that we use to support the UI system. I don't think we've really had an outage at a technical level. We've had a lot of phone calls, but we haven't actually had an outage. We've increased our capacity in our phone lines. We've made dozens of changes to our self-service system to make it easier to navigate and to make it a little more customized for the situation we're in right now. We've added a great deal of content on our external web that's been copied by other states. We've done something that other states haven't done that we've noticed, and that is that we've tried to use the data that we collect from all applicants to determine their eligibility without running them back through more data collection if that's possible. So we've tried to use what we have in order to determine that whether folks are eligible or not, rather than saying you need to come back in and fill out some more paperwork for us. We recognized early that asking people to fill out more paperwork that frankly we don't have time to review either was a way to shift the burden over to applicants, but wasn't a good way to get them paid. So we changed our processes to using analytical tools that we've developed to help us move through as quickly as we possibly can. I think we were going to do a little update on the trust fund status that you, Mr. Chair, had mentioned at the beginning. We have announced that we will be in a position to require us to start borrowing money sometime, probably early in July, it looks like right now. We started this before the pandemic. We started with about $1.5 billion in the UI Trust Fund. That was on March 14th. In recent weeks, we've been paying out nearly $140 million a week in benefits. During the high point of the Great Recession, we paid out $42 million a week. So obviously around $100 million more in benefit payout per week. Borrowing from the feds is a standard normal process that's set up under federal law. It's designed to do that because the understanding that states should carry enough money in their trust fund to get through a normal year and sort of a kind of normal to mild recession. But once states exceed that, then generally speaking, most states will go into a borrowing mode. So we will be doing that as well. We'll be joining several other states, including California, Hawaii, Illinois, Massachusetts, New York, Ohio, Texas, the Virgin Islands, and West Virginia. The only way we could have avoided borrowing is to have carried a trust fund in the neighborhood of about $4 billion. That's twice what solvent is considered in Minnesota. So solvent for a trust fund in Minnesota under the federal standards is about $2 billion. And to carry that much additional money in the trust fund would have probably not been a good idea, as it locks up the money and we don't know if we would have needed to spend it. Currently, the federal government is not charging interest for any borrowing. That is true through the end of December. So the state will not experience any interest on the amount that's being borrowed through the end of December. The administration is working with our congressional delegation to have that extended, and we are optimistic that that will happen because so many states will be in the same position and because the federal government did this during the Great Recession as well. We're also asking that they look into helping states to recover the amount of benefits overpaid. A pandemic is different than an economic downturn, obviously, and we hope that we can be creative about ways for the trust fund to recover. I know folks would like us to have a long-term estimate for where the fund is going and what's going to happen next. We're challenged by doing that in the same way everyone else is. We've never actually managed a pandemic before. We're hopeful we're on a good path where folks are getting back to work and we will be paying out less money per week, but we're not sure what that's going to look like. And so we're uncertain exactly where we're going to be going into the future. A question I'm trying to check my notes here, I'm sorry. As we move farther along, we'll be able to do stronger and better estimates. We have requested right now about $1.3 billion in what can be considered a line of credit from the feds to cover July, August, and September. That's intended to make sure that we don't have to adjust our requests It's not a process that requires an extensive approval or anything like that. A state just puts their request in, and the Fed just essentially approve it right away, and then we have a line of credit that we can draw from as needed. Make sure I didn't miss anything. So just a little bit background. We did borrow during the Great Recession as well. We started borrowing in 2009, continued that through April of 2012. At our high point for our balance of borrowing, we were at $771 million in mid-April 2011 for borrowed money from the Feds back during the Great Recession. Just because we don't know right now if spending or if benefits drops, we're not quite sure, but it's going to be a significant amount we would anticipate because we still have winter before us. Even if the COVID-related activity slows down, we will still have our winter benefits coming up. With that, thank you, Mr. Chair and members, for allowing me to provide this update. I'm happy to try to answer any questions you might have.
Thank you, Mr. Hegman, and Senator Draheim. You had we'll go ahead and open it up for questions. Senator Draheim, I had you first.
Thank you, Chair Pratt. I have a couple questions if I could. First, clarifying on the number of people this week on unemployment. What was that number?
I'm trying to. I'm sorry, Mr. Chair, Senator. Let me see how many I've got right here. It moves around quite a bit. Give me a second. I apologize. I'm reaching around on my desk to try to find my notes for the most recent one. I think it was. I apologize. I have data all over the place, and of course, the one you're asking for, I don't have at the moment. Benefit requests for last week were 513,000, so that's what we would count as active.
Thank you. And if I could, Chair, my next couple questions have to do with a bunch of emails I've gotten from business owners trying to get guidance from DEED regarding the payments to the state as a result of this layoffs due to COVID. How are you going to treat that from an employer standpoint, and me having multiple businesses and paying for multiple accounts for unemployment? I relate to them. They quote here a statute in one of the emails, Minnesota State Statute 268.047, subdivision 2.5 states that unemployment benefits paid will not be used in computing the future tax rate of taxpaying base period employer or charged to the reimbursable account of a base period nonprofit or government employer that has elected to be liable for reimbursement when 25% or more of the employees were laid off as a direct result of an act of nature. How are you guys interpreting that? What can I expect? What can these people expect moving forward?
Mr. Chair, Senator, there are that's the provisions under our law 268.047 are the provisions that generally specify how employers who have layoffs repay the trust fund subsequent to that. The particular provision you're citing to is the one that's related to natural disasters. It applies to both tax-paying employers and reimbursing employers. Much of this is a natural disaster, obviously. Let me back up a little bit. The executive order and then action by the legislature subsequent to that provided that tax-paying employers, that category of employers, would not be charged for benefits paid as a result of the pandemic. So that category, which is the vast majority of of employers in Minnesota, will not have their experience rating, their future tax rate affected by the need to pay benefits due to the pandemic. Reimbursing employers were not specifically covered under the executive order or the actions of the legislature. The provision that you read, we feel like would apply to most of the reimbursing employers, and we believe that is what's going to take place. It gets a little bit more complicated, Senator, because the federal government has agreed to at least partially reimburse the state of Minnesota for the benefits paid to workers who worked for a reimbursing employer. And the way that that law is written is complicated and probably inadequate. We have been talking with folks to try to get some changes made to that to make it more liberal in order to provide more assistance to those reimbursed employers and ultimately to the state of Minnesota as well. What we hope to do is see some changes take place that would essentially have the feds reimburse the state of Minnesota for the cost of that's applied to the reimbursing employers. And in that way, we can relieve them of the charges and also not overburden the trust fund at the same time. So right now, we are effectively waiting for the reimbursing employers. We are not sending bills out. We're not expecting those payments right now. We're trying to work with our federal partners to hopefully get Congress to take action to relieve those reimbursing employers of the costs associated with this as well, and also bring the money back into the state to make up for the benefits that were paid. It's unfortunately one of the most complicated parts of unemployment insurance law, and obviously something people are keenly interested in right now. Tax-paying employers, that part should be fine. They won't experience a tax rate increase as a result of this. Reimbursing employers, ultimately, we don't think that we're going to be shifting the cost to them either, but we're kind of working through a process now with the feds to make sure we get all of that right and that the timing is done correctly.
And Chair, if I get one last question.
One last question, and we can always come back to you, Senator Graham. Go ahead.
Okay, thank you. With it costing us, what was it, 140 million a week for unemployment? What can we do to get people back to work that don't want to go back to work? And I know I've had this discussion with the commissioner multiple times, and it was one of the first things we brought up when this started. But I'm hearing from dozens of employers that their employees do not want to come back. So can you give us some guidance on
that? Mr. Chair, Senator, it's a complicated problem, obviously, that I'm not sure I'm entirely qualified to address. It's an economics problem, and I think to some extent we need to have those sort of folks in the room as well. What I can tell you is that that the mechanisms that one typically uses in the unemployment insurance program to help prompt people to leave the program are not especially well available to us right now. That's a long way of saying that there's mechanisms in place now that make it difficult to drive folks who can find a job to get those jobs. In addition to obviously the financial aspects of the additional $600 payment, et cetera, there's also just the fact that there's 500,000 people in a program that's currently set up to handle at most 100,000 people. So if, for instance, somebody is not getting back to work, that creates a challenge for us. If they refuse a job, we have to adjudicate that. Every one that we adjudicate requires a potential of a due process hearing behind it. And that's a lengthy process. It's an expensive process and it's a delayed process for everyone. So we are actually asking policymakers to try to understand the limitations of what we can do right now and help to think through creative ways to help people get back to work and make that the right and easiest decision for them to make. It's going to be a tough problem, obviously, from all kinds of directions.
Thank you.
Thank you. Next, we have Senator Utke.
Thank you, Mr. Chair. And question for Mr. Hagman, and actually part of it Senator Graham already touched on, but my concern was, we're draining the trust fund and we now look to borrow substantial money from the feds. It's how do we, one, pay the money back to the feds, and how do we rebuild the trust fund without taxing our employers? Employers expect to pay if they created the need for the unemployment. They didn't in this case, and they've already taken a heck of a beating by just on their business alone, lucky to stay alive, and just making sure that we're not going to go back and increase their unemployment rates because of this. And I don't know if you can touch on any of that, but that's what I'd appreciate.
Mr. Chair, Senator, you've said very concisely exactly the thing that we want the feds to hear, honestly. This is an instance where the unemployment insurance program was used to handle a problem that existed for workers and for communities, in the sense that workers needed to be able to pay their bills, but we also needed to keep spending going in light of the COVID response. I would agree with you. This is not normal unemployment insurance. We're using this program to do a different kind of thing right now. And where that cost should be shifted, I think, is exactly the policy discussion you're suggesting that needs to take place. I think we would say we agree. I think this is a good opportunity for the federal government to weigh into this discussion as well, for exactly the reasons you say. So I think we all agree with you. The law does something slightly different right now. We're not looking, even the experience rating portion won't change. There's other elements which would take longer to go into that would potentially affect tax rates, but not until 2022. So right now it's shifted out. Our financing structure, as you suggest, is usually pretty balanced. And, absent a pandemic, we can recover out of just a normal tax structure and maintain our trust fund at a reasonably decent level. All of that's kind of, as you suggest, imbalanced right now due to the events. So best I can say is I agree with you. We can talk more about how the trust fund recovers. It's just a very long and technical conversation.
Thank you.
Before we get back to Senator Draheim, Mr. Hegman, because we have a hard stop at 12:30. Yesterday, we reached out to DEED. We'd received several claims of fraudulent filings. And I believe you had some comments or thoughts on what we're seeing in DEED, what DEED is doing to prevent that, and it's effectively identity theft. Isn't that correct? Much like we see with the income tax fraud.
Mr. Chair, thank you. Yes, it is nearly identical to the effort that bad actors make to use identities that they have stolen in order to obtain, for instance, somebody's tax refund. So that's not unfortunately, uncommon thing. We live in a world, obviously, where many of us have large amounts of data that have been extracted one way or the other, and all of us are vulnerable to this. We are seeing what other states are seeing, which is bad actors who have obtained private data about individuals in Minnesota, other places too, that are filing for benefits. It appears to us, we knew this would come at some point. It's happened in other states. It appears to us that we did not have a lot of it that we know of prior to the last couple of weeks. And then it appears there's been a very strong uptick in the last couple of weeks. That's not uncommon. These sort of things happen inside the program all the time. We regularly have bad actors, again, using stolen data to try to file claims. It's not uncommon for these groups to move between states. So they sort of go out and buy a set of data. And then, of course, it makes a difference what state you file against. If you think somebody lives in Minnesota, you'd want to file against Minnesota. If it's Wisconsin, you'd file against Wisconsin. So that's a fairly common pattern in all UI programs across the country. Obviously, there's huge incentive to do it now. The data is coming externally. It's dark web type things, bad actor things. None of the data that's being used was obtained from DEED, from the UI program. There is no data breach within the UI program. There's obviously data breaches that occur, in private companies and elsewhere have occurred throughout the years. We expect that that's probably the source of the data. We expect this to continue, to be blunt with you. We can't tell it's a fraudulent claim until they've actually filed it. And it's all quite obnoxious. We are shutting them down as we detect them, and making sure that the fund doesn't lose money if we can possibly prevent it. We're also mindful that at the same time this is happening, real Minnesotans who have lost their work are also applying for benefits. So, it's a balancing always between not wanting bad actors to get money and not wanting to prevent good Minnesotans who are unfortunate enough to have lost their job to not get the assistance they need. It's something we deal with all the time. Obviously, the volume's just really picked up over the last couple of weeks, and we're still trying to assess where we're at.
So, Mr. Hegman, I actually ran a fraud prevention shop in 2 organizations. Are you identifying suspect claims, and are you reaching out to verify fraud? And what is your department doing to help people when you identify a potential problem because they may not see it? And 2, what are you asking people to do if they find out they are the victim?
So it's Mr. Chair, thank you. Mr. Chair, thank you. It turns out that the recent pattern has actually been that they're using recent addresses too. So folks are getting notified immediately that this has occurred, which has been a bit unusual. We are trying to get our data, our information on our external website updated to tell folks what to do. I will tell you what we tell them is the Federal Trade Commission has a decent website that explains what to do. Oftentimes you need to file a police report as well. The first and the primary thing is if somebody has filed a claim in Minnesota using your data, that means you are vulnerable to other acts of data use in the same way. It happens to be that they knocked on our door, but they have some private data, pretty significant amount of private data, and you are vulnerable as an individual, and that's what we tell folks when we talk to them, and that's what we will make sure we have on our external websites to inform folks of what that is, what's going on. I'm sorry, I was kind of, I think the source of the rest of your, I remember, sorry. It's tough for us to actually contact the person we believe to be the data theft subject. So we can see that we have an address and we can see we have a phone number in most cases, but we don't actually know the address or phone number for the data subject before the application is made. And so we would have no way of knowing whether we're just calling the data thief or calling the actual owner of that data. So, we know how to find you, obviously, but for most Minnesotans, we wouldn't know if that's an authentic address for them or if that's a made-up address or just a dummy address that somebody added. So reaching out to contact them is nearly impossible, and in some cases, not even a good idea because we might accidentally contact the data thief themselves through that, and that's always part of the challenge of this.
Okay, thank you. Senator Graham, you get the last question.
Thank you, Chair Pratt. I guess one thing that we have talked about before is the fact that our high school kids pay into the fund, but they don't get paid out when they are laid off. What has been the conversation on that? Is there anything new moving forward? What we're going to do different?
Thank you, Mr. Chair. Thank you, Senator. Under state law, a minor in this case, who is in secondary school is not eligible for unemployment benefits. That provision was passed some years ago with the intent that we would never want to put somebody in secondary school, secondary school, into a position where they have to make a decision to either quit school or receive unemployment benefits. Typically, to receive unemployment benefits, unless you're considered a dislocated worker, you're not eligible if you're in school full time. So UI pays unemployed workers, not necessarily students under ordinary circumstances. So that's the origin of that provision. That's where that comes from. One can make arguments about that, for emancipated adults and others where maybe there are differences, but that's the intent behind it. Behind that provision, it's up to obviously the policymakers if they want to make a change to that kind of thing. But that's the history behind that provision. Removing the provision entirely would effectively make elementary school students eligible for benefits as well. We have had applications from 10-year-olds and less. It's also an opportunity to get into a different kind of mischief. We talked about a kind of fraud that takes place, but the most common fraud in the UI program is simply the actual applicant telling us some information that's not true in order to obtain benefits. So we're expecting that this provision, changes to this may come up in the special session. That's what we know for right now, Senator.
Thank you.
Thank you, Mr. Hegman. Certainly, feel free to keep us apprised. One thing I've been asking for, and I hope that you'll be able to start providing soon, is that, we get a daily update on applications. But I've been asking for and hoping to get a sense of how many people are coming off the rolls as we begin to open up the economy. Kind of back to Senator Draheim's question of how many active claims do we have in a given week? Because I know we are, and I've got the number right here, but we are in excess of, as you said, 703,000 claims just since the third week of March, and I think it's important for us to also understand how many people are in fact getting back to work. While we may open up the economy and have 98% or 99% of jobs available, we know those jobs aren't being refilled. So hopefully that's something that you'll be able to start providing.
Thank you, Mr. Chair. Yes, we will try to start to take the data apart so we can do that.
Yeah, thank you. Members, we're at our time. Senator Ecke, I know you have a question. Maybe we can follow up offline, but we do have to get off the bridge so that the Energy Committee can get ready to use it. Members, if we need to get back together, reaching out and having those conversations. With that, we're going to go ahead and adjourn this hearing today. I want to thank all of our testifiers for being on this morning. And members, thank you for being flexible and such short notice. With that, we'll stay adjourned till the call of the chair. Thank you.